2024 is upon us. Now is the time to make decisions for 2023's crop and protect this spring's investment. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits, regardless of market volatility. Our team is ready to help you tackle 2024's uncertainties. You never stop working, and neither do we.
Good afternoon. My name is Drew Moore. I've got Brian Basting and Michael Reginelli in the studio here with us today to recap the USDA Prospective Plantings and Stock Reports that was released at 11 a.m. today. And right after the report was released, we saw green on the screen almost immediately, essentially stemming a bullish day. But at the end of the day, corn, both nearby and for new crop, closed up 15 cents. Nearby soybeans closed down 1/2 cent, with new crop beans up 3.5 versus the Nove, and May wheat closed up 14 cents. So, all that being said, guys, let's get into the numbers. We've had a little bit more time than we usually do to digest the numbers. But Michael, first question for you: what stood out on the stock side of the ledger today?
Yeah, I think the acres, which I think Brian might talk about, probably got most of the attention, but the stocks numbers were notable as well. Corn stocks came in about roughly 100 million bushels below the average trade guess, a little bit tighter, tended to be supportive. You obviously saw that between that and the planting numbers. Bumped the market up a little bit on the future side of things. Still just shy of 1 billion bushels more on-farm stocks than last year, I believe, Brian, as well, though. So that's something that we can kind of dig into a little bit. But if you look at the year-on-year, it's still a net increase. So although we were tighter on corn than the average trade guess, in general, we actually do have obviously more inventory last year, bigger crop, and it's swelling in certain regions too. You feel it a little more in the Eastern Corn Belt on corn here too. So there's going to be some takeaways from that. On beans, it was a little bit of the opposite. I would say 10 to 15 million bushels higher than the average trade guess. On beans, modest drop in futures today, although we were choppy, had a two-sided trade. I think beans were influenced to some degree by the rally in corn and wheat, but weren't able to hold in positive territory. But similar to corn, increased stocks year on year. Probably, I would say it's not going to move the needle from a carryout standpoint, at least on old crop on the stock side specifically. So,
Sure. Thank you. Appreciate that. Yep. Brian, the more exciting topic today, what did the planting intentions have to tell us?
Well, they did the survey, Drew, the first 2 weeks of March. So it is the first survey-based numbers, but even there, obviously that's 2 weeks out of date. I just remind the viewers of that. Sure. But we did see a lower than expected corn acres number, Drew. It was only 90 million acres. That was actually right at the low end of the trade range. Trade range was 90 to 93.8. I'd remind the viewers last year we planted 94.6. So 4.6 million acres less than last year, according to USDA. That really gave us an underpinning in this market today. Some short covering into the month, that type of thing with commodity funds and so forth. On the bean side, Drew, we had a number that was right in line with expectations, 86.5 million acres. Now, that's up from last year. Last year was 83.6. It was right about the middle of the trade range, so no big surprise there. Maybe the bigger surprise, Drew, if you can picture an acreage pie, if you will. Sure. Add in sorghum, add in wheat, add in sunflowers, the whole kit and caboodle, if you will. We're down 6 million acres from last year, according to the USDA. So that's a number that caught some people by surprise. Some people maybe were expecting a bit more milo acreage, a bit more bean acreage. Cotton, as Michael said. Yeah. So I think it's a number that's not carved in stone. I'd remind the viewers as we go forward, Drew, that number can change a lot, or it can change very little, as history tells us, between now and the final number at the end of June.
Sure. When you look at economics for planting corn here in the next month and a half, and you go to the fringe states, is it somewhat variable, or are those economics comparable? And obviously, planting corn right now is not overly profitable, if profitable at all.
No, you're spot on. The profitability is not there, Drew, in terms of looking at particularly the fringe states. I glanced at some of these states here in the South. Arkansas down 27%, Mississippi down 25%, Louisiana down 20%. Now, we're not talking about a tremendous volume of acres, but it adds up. And I think if we add up those quote-unquote fringe states, it's closing in on over 900,000 acres lower compared to a year ago. So you could argue a chunk of that reduction is being seen in those areas. So again, those states, maybe some more cotton in those states,
Sure.
maybe a few more beans in those states, regardless. But in the core of the Midwest, we saw more modest decreases. About 3% here in Illinois, 2% in Iowa, a little bit more, 8% in Ohio, 6% in Indiana. Minnesota's down 8%. Nebraska, though, only down 1%. So again, the larger volumes of acreage here in the Midwest, very much significantly larger, but still down from last year.
Appreciate that, Brian. What's going on down in Brazil as they have their safrinha crop in the ground? What's next?
Yeah, I think that remind the viewers as we approach 1st of April, the corn is in the ground. No more planting at this point.
Right.
Vegetative stage, some parts of Mato Grosso, for example, some parts of Mato Grosso, the largest producing state, about half the safrinha crop, are pollinating, just a small amount. As you get further into April, mid to late April, quite a bit of pollination will occur in the northern state of Mato Grosso.
Sure.
As you go south, Drew, pollination will stretch all the way into May. So we got a 60-day, I'd say 45-day window here, where it's roughly the equivalent of that 1st of July to the 15th of August here in the Midwest.
Sure.
Well, it's a weather market. We want to keep a close eye on that. For the moment, there's not a major concern about safrinha. It's a little bit dry in the south, but they've been catching some good rain in the north and some areas that were dry. So picture, if you will, entering early July or late June maybe in the Midwest with getting rain on corn.
Sure.
It's good and ahead of pollination.
Right. Thank you for that. That's helpful. Michael, great job on the stocks rundown earlier. What do you make of the second half of the marketing year, knowing what you know today, and what cash implications and spread implications are due because of that?
Yeah, there's going to be several takeaways. I mean, one's going to be, obviously, I think the carryout for this year on corn, I think most will look at the smaller stocks number today, or the 100 million off the average trade estimate.
Sure.
And probably start ratcheting down carryout estimates, getting it a little bit tighter on the corn side of the balance sheet. That's still to say the stocks, commercial and on farm, are still quite a bit bigger than a year ago, like I mentioned. Same story on beans. We have more inventory out there. So even with corn carryouts tightening up a little bit, I said I don't think there's going to be meaningful changes to beans at this point. I'd remind people, though, that we're still at a $2 billion plus carryout, most likely, for this current marketing year. It's a dramatic difference than the last 3 years, where we've been in the low to mid ones.
Right.
So it's more supply burdened than we've had in several marketing cycles now.
Right.
So that's something to bear in mind. From a cash implication standpoint, the other thing I'd note too is the percentage of on-farm stocks compared to commercials very high. That goes for beans as well as corn, but corn specifically.
Sure.
So it really comes down to when's the producer going to move, and when is he actually going to make sales. Got a nice pop in the board today. I think we did move cash corn across space. My guess is in certain markets we'll see a little bit of basis backing off as we kind of head into a long weekend. Not uncommon for long weekends anyway to take a little bit of protection. Really next week, I think, is when we'll see kind of what the impact is. How much corn moved? Will we be able to kind of sustain this pop today, carry it into next week, and actually continue seeing cash sales in the country? It's going to be hard to judge it today specifically, because not only did we have a USDA report, obviously one of the quarterly reports for a year tend to be some of the biggest market movers out there. Right. They just so happened, with brilliancy, to put it on a day that happens to be month end and quarter end and ahead of a 3-day extended weekend, which always kind of yields itself to some volatility.
Right.
So next week will be pretty important. If corn is moving across space, then I do think that we'll see a little bit of back off on the basis side, despite the fact that we did miss the range here. So we'll keep an eye on spreads. Spread action was a little firmer on the forward curve, pretty neutral on old crop. Back end bean spreads between the acres and the stocks numbers really did relax a bit today as well, and I think as one would expect. So it'll be interesting to kind of see how we go here forward in the year, but we might solve some of the demand tightness a little bit if we actually did buy significant bushels across space.
Good, good. Thank you very much. With some of those comments, certainly the on-farm storage for corn and soybeans, that plays a big role in the producer marketing side of the equation. And so, Brian, I've heard you say it. If I've heard you say it once, I've heard you say it 100 times. Get control of your bushels, right, for old and new crop. What are some strategies to look at, and any other insight you'd like our viewers to hear today?
Well, as Michael highlighted there, Drew, there's quite a bit of old crop corn left on the farm, as it were.
Right.
So as we approach the second half of the crop year, really want to consider several different ways to approach that. One way to approach that was if your basis is favorable, locally you can go ahead and make a sale.
Sure.
You can go ahead and buy back a call option, though. Strongly encourage producers to get that flexibility of buying that call. We don't know what's going to happen with that Brazilian pollination right in front of us, much less what's going to happen in our growing season this summer.
Right.
So you want to be a participant. You want to be able to, as it were, cheer for higher prices, even if you do sell.
Sure.
So the other alternative would be you could buy a put option to give yourself a floor underneath the market. Those puts are a tad cheaper today than they were on yesterday with the market rally. So what you want to do regardless is, as you said earlier, get control of these old crop bushels. That way you can turn your focus entirely to 24 crop, because as we look at these 24 economics, they don't look as attractive.
No.
You highlighted earlier, Drew. So we really want to put ourselves in a position where we maintain flexibility on new crop too, but give ourselves a floor in the market, because as we go forward, what I'd remind the viewers is, yes, we have lower corn acreage, but remember what happened with the yields last year. Now every year is different. Every year stands on its own.
Sure.
But boy, it's hard to ignore those genetics from last year, Drew, in terms of, in some areas, nationwide, obviously a record corn yield. Some areas that have very little rain, all the way up until early July, end up getting stellar yields.
Right.
So just keep that in mind here. And again, every year is different, but use the tools that are available to you, your toolbox, as it were. Work with a trusted risk management consultant. Allow the upside to be open, but keep that floor in there, because as Michael highlighted a moment ago, spot on. These carryout numbers, Drew, from 1.2 to 1.3 on a corn carryout to still a 2 billion bushel corn carryout, feels heavy compared to the last few years.
It does.
So as you go forward, there'll be a lot of twists and turns, but just remind the viewers we are going up now on any stocks for both corn and beans compared to a year ago.
And to that point, Brian, we can play with numbers. We can argue about 90 million maybe being a little too low. We could certainly add to it, as you noted earlier, and there's a lot that can change in the demand assumptions. But if you take 90 million acres, you use a 175 yield on aggregate, which is 177 last year was a record. So it's pretty fair from a trend standpoint. If we have a good growing season,
absolutely.
You make some general assumptions on demand, it still puts carryout next year for 24-25 above 2 billion as well. So it doesn't bring us into that tighter market cycle that we just spent 3 years living in. It's going to be, in my mind, more reflective of this year that we're currently working through.
Sure, sure. So all that said, you've got some weather markets here, both in the United States as the planters get rolling. You've got the safrinha growing season coming up over the next 45 days, and you've also got a pretty robust fund short in corn and other commodities. Any more short covering to ensue after today's little pop, or what are your thoughts there, and what are we looking at from a fund perspective?
I think the corn short was probably around 260 coming into today. My guess is we covered between 10 and 20 of it.
Sure.
We won't. There's a lag in the commitment of traders data. In fact, we won't see even what it'll be Monday when we get the next report. But even that'll lag. The USDA action from today. So big rally today. I mean, I would guess that we're at ballpark 250,000 short. Still very aggressive short.
Absolutely.
With the lower acres, with the tighter stocks. Obviously, it looks a little less constructive, at least at face value, for some of the bears in the market too. We could certainly see a little bit of follow-through, short covering into next week. My guess is a lot of that action got hit today, just with the events I noted earlier, holiday weekend, month-end, quarter-end, fiscal year-end for some people, and in the report, obviously. So we'll see. But still running a pretty hefty short. If some of those issues with safrinha, or we get some of the dryness lingering in parts of the U.S. Corn Belt currently don't see sufficient moisture.
Right.
We have issues with planting. We get any type of crop stress this summer in the U.S. Safrinha has an issue in Brazil. There are notable things that could continue to accelerate that short covering, and that would theoretically prop the market up because it's, it's a hefty short right now.
Absolutely.
Beans fairly flat, probably 150 short, 1,000 short, give or take. Wheat probably closer to 80, I would say, although we certainly covered some of that in today as well. Didn't talk about wheat a lot, but, lower acres, lower stocks, 15% lower in soft red plantings, and the stocks number surprised a little bit as well on wheat. So we got a bump alongside corn. Corn was probably the main influence of the rally, but there were some friendly data reports on wheat today too.
Absolutely.
But really running hefty shorts on all three commodities. Any stress to the outlook or the balance sheets on those will continue to accelerate that. That does tend to prop the market up a little bit. So we're still vulnerable to that, I think, at the moment.
Good, good. Well, thank you both for your time today. The next USDA report will be April 11th, so we'll have the same type of cadence. ATI Pro Media, Tommy, Brady, and Connor digest the report as it's released at 11 a.m. Central Time during the day, and then we do a little bit more in-depth recap. So that same cadence we'll do again on April 11th. But don't forget to catch ATI Pro Media live every day at 9 a.m. We also have a premium subscription that includes 6 on-demand videos a week, morning comments and a newswire, actionable text, and more. So feel free to check that out on our landing page on our ATI website. And thank you again for tuning in. Happy Easter, and go Illini.
Welcome to Advanced Trading. Join the community of thousands of subscribers for access to industry-leading risk advisors, insightful research, and engaging live streams. We are your go-to channel for the latest grain market and livestock analysis. Subscribe now.